Happy New Year, everybody. Hope you had a Merry Christmas and are ready to start the new year. Colter Brown here from the Northern Ag Network with our first livestock report of 2023. We're actually going to start by looking back over 2022 and talk about how things might be affected for the cattle market over the next year. You know, I flipped back to last year, and in 2021, at the end of the year, we were talking about things like drought, inflation, and supply chain disruptions, and a lot of those things still held true for 2022. In many cases, drought became even more widespread. We did see some areas that saw improved moisture conditions, but that's not saying much given how bad 2021 was. Of course, inflation held with us, high costs across the board, and interest rates continuing to climb as many cow-calf producers raised their most expensive calf crop ever this last year. Today, we're going to talk about where the cattle futures finished the year at. We'll also, of course, look at the cash-fed cattle, feeder, and bred cow markets, talk about the projections for next year, look at how the supply and demand fundamentals are shaping up and what we can expect on feed costs, and we'll wrap up with a quick update on how the recently passed omnibus spending bill affects livestock producers. First, though, I want to give a thank you to our sponsor, Ag Risk Advisors. They've supported us since the very beginning our third year of this livestock market report. Hopefully you got your pasture, rangeland, and forage insurance all settled up. Even if you're using another agent, I'd recommend doing a coverage example with Ag Risk Advisors. You can sign up for daily rate updates at agriskadvisors.com. Let's start out looking at the futures market here, where a pretty strong finish to 2022 actually. Live cattle futures up $18 from where they closed 2021. You look at some of those deferred futures trading in the mid 160s, and there's some optimism about where this market could go. In the feeder futures, the year wrapped up not trading at contract highs, but actually some of the highest prices of the fourth quarter. You look again at those deferred contracts. You got feeders trading $25 above the spot contract, well north of that $2 mark. In the cash-fed cattle, we're nearly $20 above where we finished last year. The cash trade there was holding pretty firm during the holiday weeks. Short and kill weeks and lower packer demand were offset by strong gains in the box beef. Live cash sales mostly in that 155 to 158 money. Dress trade from 246 to 249. The recent cattle on feed report reflected fed cattle supplies that are continuing to tighten. On-feed numbers down 1% from last year. Marketings were record large for that cattle on feed series for the month of November, 1% above last year. Placements came in higher than expected, but still down 2%. Seasonally, cattle on feed inventories typically increase from November to December. However, this year was a departure from normal, and we'll likely see those inventories continue to fall through most of 2023. The choice box beef cutout had been showing some weakness in the fall, especially in early December, but again, a strong rally to close out the year. That indicates that beef demand may be holding in. Now for the feeder market, prices were fairly steady in the final sales of the year, although there were some disruptions from the snowstorms and bitter cold temperatures. At the last sale of the year at Torrington Livestock, we saw those 550 to 600 pound steers average 213. That's up from 186 a year ago, 14% higher. And in 2020, they closed the year at an average of 161, a gain of 52 cents in 2 years, or $300 a head. You can see at Stockman's Livestock Exchange as well, those 5-weight steers staying well north of the $2 mark, 6 weights ranging 193 to 212, and 7 weights 182 up to 195. So again, prices aren't the problem here, it's the expense side of the ledger. Diesel costs have come down recently, but still historically high. Feed costs likely to stay elevated for most of 2023. And we talked about interest rates, that costs double what it was just a year ago. So we need to see these higher prices to improve profitability. Hopefully we'll have the chance to do so in 2023. As we talk about that feeder market, we'll get a real good test of it in January with Northern Livestock Video's annual Diamond Ring sale, where 60,000 head will be offered. In the bred cow market, it's going to be very interesting to watch. Had a couple of big sales in December with the Pays Blue Ribbon sale and the Northland Stock Cow sale. Those bred heifers at the Blue Ribbon averaging $17.90, 2 to 4-year-old cows ranging $1,700 to $2,300, 5 to 8-year-olds averaging $17.90. In the Northland Stock Cow sale, the solid mouth cows ranged $1,135 to $1,400, and even the short-term cows averaging $1,035. But what can we expect from this year in 2023? Well, cattle producers have an improved market leverage position, sitting in a better place than they were a year ago. That's largely been driven by the supply side of the equation. Since 2019, the U.S. cattle inventory has declined by 4.7 million head and will likely continue to shrink for the next year or two. At the end of January, we'll get the semi-annual USDA cattle inventory report. I think that's going to reflect one of the sharpest declines in beef count numbers for a single year in quite a while. So we're going to see decreased steer and heifer harvest in 2023, and that's going to lead to significantly smaller beef production. At the same time that cattle supplies are falling, packing capacity has increased above pre-pandemic levels, creating more competition for fed cattle and putting more of that consumer beef dollar in the hands of cattle producers. We spoke a little about beef demand, and it is remaining pretty strong here. Exports going to be 5% higher by volume, record large on both a volume and value basis. There's concern about the strong dollar, and both domestically and internationally, inflation could have an effect on beef demand, but not expected to significantly reduce consumer spending. In early December, I did get the chance to catch up with Eric Snodgrass, atmospheric scientist with Nutrien Ag Solution, and he said he's expecting these La Nina conditions to break up, and he's calling for a wet and cold winter, and boy, by mid-December did he sure seem right there. We saw those bitter cold temperatures. You can see some of the pictures from some of our listeners that they shared with us there. We do hope the moisture continues to improve as the year wears on, and definitely as we get into the spring, hopefully that'll help pastures heal up and bring those feed costs down. Corn prices still expected to average $6.50 next year, with a range of $1 on either side of that average. And that's down slightly from 2022, but still higher than what we've seen recently. Now, in CattleFax's projections for 2023, they're calling for improved prices across the board. Fed steers expected to average 156 with a top up to 172. 800-pound yearlings forecast to range 180 to 215 and average at 195. 5.5 weight steer calves range 195 to 245. The average at 2 1/4. I think there could be some upside potential to that forecast. Slaughter cows expected to average $1 with hopefully a significant decrease in beef cow culling. Lastly, I wanted to touch on that omnibus spending bill, as there are several ag provisions included within that. The Growing Climate Solutions Act was included that will set up a USDA carbon program. Going to be interesting to see how that develops. Disaster aid funding included for agriculture for losses in 2022. There's $3.74 billion included, with $500 million set aside for livestock producers. Congress also reauthorized livestock mandatory reporting, but did not include cattle market reforms to mandate negotiated fed cattle trade or create a meatpacking special investigator office. Those may come up again in the new Congress. Well, we certainly covered a lot today. Appreciate you joining us. There's definitely optimism for next year, as there almost always is in the ag business, but we're hoping for green grass and high prices. From all of us here at Northern Ag Network, we hope you have a blessed and prosperous 2023.